Hi everyone, it's Emily here. Let me just show you what goes on typically in my trade room. Normally I do this in 3 steps. Step 1, I go over the upcoming news about 10 to 15 minutes before the news release with a detailed analysis. And then we look at the actual release time, the actual news release. And if everything lines up, then we actually get into entering an order. So now, let's just look at the analysis.
And according to Forex Factory, we're looking around negative 56,000. We're going to be looking for at least a deviation of 70,000. So meaning if we get 20,000 of positive release, it would be good for US dollar. Giving the positive release, it will be the first positive release this year. Obviously, it would be a second positive release for the last 6 months. Remember, the first positive release didn't come until, I think, in January after a revision. So this would be a pretty good surprise to the upside if we get a positive release. However, if we get a negative release, it would be as expected, since there is a lot of strong arguments for a worse than expected release. And we're looking for somewhere around the area of negative 120,000 in order for the market to be surprised and to move in the risk aversion direction for an extended period of time. So we're definitely going to be looking for at least anything over negative 100 in order for the market to move in that direction. Now we have several parts that we need to concentrate on, and that is the actual release number, the revision, the unemployment rate, and those 3 are the primary part. The revision is basically last month's release, and right now it sits at negative 20K. So we might see a revision of that. If the revision is not a huge number, let's say it's not like a 50K revision or so, I think the market will probably just ignore it. But if we get a strong revision, then we need to pay attention, and hopefully the revision and the release surprises goes to the same direction. And if we have a conflict, then that's concerns to stay out of the market. And thirdly, we're going to be looking at the unemployment rate, which is a primary focus in the jobs market. The unemployment has always been a strong debating point for the Fed to either raise rates, and every time when it comes up, it's always being used as why the Federal Reserve has yet to hike interest rate. And we don't really expect to see any kind of substantial improvement in the unemployment rate. But if it can remain at the current level, 9.8, 9.7, or start to move a little bit downward, 9.5, then you would obviously move the market. And if you read my analysis, you would know that last time we have 9.7, but today we're actually expecting a 9.8, so a slight increase. And if it is a 0.1% of increase, I think the market will be able to absorb it. But if we get back to the double digit, let's say 10%, or even try to test the recent high of 10.2, then I think the market will likely to focus on that number, and we'll see a sell-off in the US dollar. Since there are so many factors regarding to the non-farm payroll, we are not going to be jumping in on a spike trade. We will wait for the market to push, and we'll wait for a retracement, then we'll jump in. If the retracement doesn't come immediately, let's say within the 15-20 minutes, we will be careful, because we could get a whipsaw of the market going to the other direction. So we'll be looking at the market, we'll be analyzing the data. If the numbers conflict all over the place, then we will probably stay out of the market, just to be careful.
In step number 2, I lead my trade room in trading the release live And what we do is we follow the analysis in step number 1, and we look at the numbers and we look at the effect these releases have in the market. As we can see right here, the market is really jumping up, and we're seeing the risk appetite sentiment returning to the market. This is the part where experience counts, and we don't jump in on the wrong side of the market just because the number is good. So let's see what happens next.
Okay, we have actually a pretty good release, negative 36 instead of the 56 expected, so we're positive by 20k. We have the unemployment rate sitting at 9.7 instead of 9.8. We're seeing immediate US dollar strength, and we're seeing the pound yen, the dollar yen really moving up. The Japanese yen is the one that's pretty much being losing across the board. So we're seeing immediate jump, about almost 88 pips on the pound yen pair. I think this is the currency that I might be more interested in trading. So let's go ahead and do our double Fibonacci, as I always do. Looking for a entry around the 134.90-ish area. If the market pulls back to that area, that's where I will be looking for my entry. 135.20 right now. We're seeing the dollar yen now testing the 90 cents handle. With the unemployment rate staying at the current level, this is actually a pretty good sign. Market is returning to risk appetite. We're seeing a stronger dollar. Well, actually the dollar has been remaining just slightly strong against the euro, but looking at the strength meter, the pound has remaining relatively strong against the dollar. We're seeing about an unchanged level now for the pound from the starting of the day. So we're going to wait for a good retracement in the market, and then we are likely to jump in on the pound yen. We're seeing the pound at 750, Japanese yen at 0, so obviously it's a good pair to be going long with. So that's what we're going to be looking for. Hopefully market will give us 135 for our entry, and if we get 135 pullback, and we'll jump in.
In step number 3, this is actually the exciting part. We're looking for the market, looking for the retracement in the market, and finally we got a retracement in the market about a few minutes after the release. And after I evaluated the market, I issued the entry order. Watch what happens next.
Alright guys, I think we have waited enough, so I'm going to go ahead and jump in on a trade here, on a buy trade. Alright, in at the 30.
Immediately after the trade, I go over the potential for this trade as I analyze the weaknesses and the strength of the market. As we can see, we're seeing that the market is really starting to take off, and our entry happens to be a perfect entry at the lower end of the market. So it is completely worth it to wait for the market to do a retracement before you jump into the market. Let's see what happens
I'm
next.
expecting to the 135, but that just means that the market is more geared towards risk appetite. I think we're going to see a strong open in the equity market. I think before the market open, we'll test to the upside, and we should be able to pick up 30-40 pips by that. So just stand by.
After you have entered the market, the next step is obviously to protect your profit. As I always said, and always led by example, is to take your profit when you're up at least 30 pips. As you can see here, I'm asking everyone to take your profit at this moment, and then we can hold a portion of the trade for that home run trade. Let's see what happens at the end of the day as we hold on to our trades. At the end of the day, pound yen reached 137.02, giving us about 170 pips of potential gain. This makes the nice winning trade out of the last 10 for Nonfarm Payrolls that I've traded. And once again, thank you very much for watching the video. Bye bye.